You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody. Welcome to this 400 episode spectacular of the Option Block. Yes, that's right. 400 episodes in the can. Hard to believe. We've been rolling along for the 4-century mark, but c'est la vie, there it is. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. And it has indeed expanded quite a bit since those early days, and the early days of the Option Block, certainly, and even beyond that. It's 8 years now for us here on the network, so there were many primordial days before we even launched the Option Block, when we just had our interview show and our other big flagship programs there. So it's been a slow evolution over time, but now that's really ratcheting it up as we hit 13 programs on the network, more to come any day now, hopefully, if we get all the I's dotted and T's crossed. So we're going to keep carving up that targeted options and derivatives segment for you in a lot of interesting new ways, and coming up with some interesting new content that we don't already have on the network for you, and try to carve up some things we do in some interesting new ways. So a lot of fun stuff on the docket for you guys. And of course, if you want to find all 400 episodes, I was just scrolling through some of those myself on the old website. Well, there's no easier place to do that than the mothership, theoptionsinsider.com. Just surf on over to the Insider Radio Network tab at the top of the page. Click it. That big overlay comes up with all of the shows on there. Just click on the View Archives for the Option Block, and there you go. And so I'm looking here, the whole 400 episodes are on there. Some great memories to relive, all of them available for you guys to stream pretty easily. Just click on the old tab there on the program, and away you go. Of course, you can find them iTunes, Stitcher, AHA Mobile, indeed, even our mobile app. No shortage of ways for you guys to dive into the meaty goodness that is the 400 episode archive of the Option Block. And joining me to celebrate this rather momentous milestone are my usual compatriots, my options partners in crime. Let's go in order of the furthest distance today. So starting off in the man beaming in from the lovely hinterlands of Maine, the rock lobster himself, Mr. Andrew Giovinazzi, who's been with us now for probably about 200 some odd of these 400 episodes. Mr. Rock Lobster, welcome to the 400 episode spectacular.
I'm pretty enthused. I can't believe it's been 200 episodes, but you know what? It has. That's Freaky City, man.
I'm trying to remember when you came on board, because this probably is a milestone in and of itself. I remember Mark brought you on as a guest a few times, I think, before you were even doing the Option Block stuff. So probably
2011.
Probably is pretty early. Yeah, crazy town. So we'll certainly get into that. Maybe I'm sure that's probably your favorite memory of the show. This is when you first came on it.
What am I doing here?
What is it? What is this thing? You're talking options on the radio, and it's free. What the hell is that? And, of course, joining us from a little bit closer to home from the scenic hinterlands known as lovely St. Charles, Illinois, where it's always a balmy 72 degrees. It's like the Under the Dome show. They're just under that dome, and they have their own weather, and it's beautiful. I recommend you check it out. Head on over stcharlestourism.com or whatever that website is. I'm sure we can send at least another dozen visitors your way. Of course, I'm talking about Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, sir. And have you gotten that nice big check from the St. Charles Tourism Board yet?
Not quite. I'm going to have to give him a call and demand my money for that one for all the tourists. It's tough. I can't get around downtown anymore. There's people that are parading around City Hall saying, "We want the option block. We want the option block." You can't get into the Arcada Theater anymore. I mean, you've just changed the whole landscape of this town, Mark.
Well, you know, when you send 6 people into a 4-person town, you're by definition going to change the demographics a little bit. You know, things are changing and happening over there in scenic and lovely St. Charles. And also beaming in, actually, I haven't done the math on this. I don't know who's closer, Uncle Mike or the Viceroy, but the Viceroy is also beaming in from an undisclosed location, a.k.a. Casa Jacobson, somewhere way out there in the burbs of Illinois as well. You know him, you love him as the Viceroy, Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Viceroy, welcome back to the program here on our 400th episode spectacular.
Good to be here, Mark, and kudos for you for building this outstanding network that gives everyone the opportunity to come and learn about options.
Yeah, it has been a bit of a fun ride, and we're certainly not done yet, not by a long shot. A lot to talk about here on the network going forward, as well as a lot to talk about on this show. So without further ado, let's dive right on into we can call it a trading block, but it's really going to be a bit of a reminiscing block today.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, like I said, it's going to be a little bit different format for today's show because it is the big 400th episode spectacular. We're going to do these a little bit differently. We're going to do a little bit of reminiscing about the show and some interesting moments that leap out to all of us. I think we'll start off with our own probably personal favorite episodes. I'll kick things off because I probably have the longest memory here next to Uncle Mike, because I have been on pretty much every episode since the beginning. So I go all the way back to the primordial ooze days when we were first conceiving of this show. People always ask, how did the show come about? And it was pretty interesting. We were approached many times over the years in the early days of our network by the folks over at OX because they wanted to do a show with us, and it just never worked out. The people they had in mind just never could make their schedules work. We couldn't make it work from our production schedule here. The timing never worked out. And then they approached me again, and I said, well, we've tried this, we've done this song and dance before, and it just doesn't seem to work out for anyone's schedules. We can't make it happen. So I was ready to say no again, and then the idea occurred to me, what if we use people who are affiliated with OX? And that's kind of how the whole ball got rolling with Uncle Mike as well as Auntie Mike or Federal Holiday Mike, whatever you want to call Mr. Kavanaugh over there. And then once I had that idea, I think the snowball started rolling, and OX, fortunately or unfortunately, inserted Mr. Sebastian in there, and we grabbed a few guys from the trading desk, namely John Grigas, to start things off, and the whole thing just kind of kept rolling from there. So it was an interesting way to start off, kind of an aggregated hodgepodge of people all thrown around the microphone, and it has evolved and adapted over these 4+ years now and 400 episodes into the beast that you know and love today, or hopefully love. If you don't love it, well, you're listening to the wrong show. So I'm going to kick things off thinking about my favorite episode of these 400 plus. And actually, for me, it's surprisingly easy. You think it'd be like choosing, my favorite baby. And that's a bit of an overused cliche, but it's not entirely not appropriate here. But when I look back at the 400 episodes, I have to say for us, the interesting one that really kind of brought it together, we got to meet the fan base in person for the first time. Maybe we had a lot of guys writing in over the years, and I shouldn't say guys, people, listeners, writing into the show over the years with great questions and feedback. And we were, of course, very early movers on Twitter and other platforms. And so we got a lot of great feedback on social media, but we didn't get a chance to meet the people very often. We do it on demand online, so couldn't see your faces. And so when we decided to hold our first live event, that to me was an interesting idea because we're really kind of testing the waters. The show wasn't that new. I believe it was only our It was actually our 75th episode at the time, so it was our 75th episode spectacular that we were celebrating. We thought we would do it in a live format, and it was back on July 22nd of 2011, so back in the primordial ooze days of this network as well as of this show. We took over a venue downtown here in Chicago called Elephant and Castle. Took over the whole downstairs area, which is pretty sizable down there. We put it all open up to all of you guys. We had a bunch of special guests, which was great. I think we had a total of 11 or 12 people on the panel, which was kind of crazy. And we went for about a 3-hour crazy, spectacular episode. So just from a pure guest perspective, having all the people on at once, all the people who had been on the show in the past. So it was myself, it was Mike, both Mikes, it was Mark, it was, I think, it was John Grigas at the time, Rob Kay, who used to be on the show from OX, Tim Navabi, who used to be on the show from OX, as well as a few other special guests in there. So it was really a pretty fun time. We got to interact with you guys live. You guys asked a lot of great questions, which is why we went for that kind of 3-hour epic length. It really was our first mega live show. We've done others since then in different venues, including the one we did most recently at the end of 2014, which was another great fun experience. That actually predated, I believe, the Viceroy and the Rock Lobster on the show, that first live experience. So you guys kind of missed out on that one. But I look back at the long history of that show in terms of all the planning that went into that, all the equipment we had to buy that we since have used on a myriad of other live events. So we've gotten our value out of it, and from logistics and from meeting the audience and from seeing the panel assembled live at the table for the first time and kind of testing the format in a live venue. There's a lot of great things that went into that show. So for me, that would probably be my favorite memory from the 400 episodes we've done here. So I'll kick it off. I hope that gave you guys some time to mull over. And perhaps I'll toss it over to you, Uncle Mike, now, because next to me, you've been on the show pretty much as long as anybody. So what would you say your favorite memory of these 400 or so episodes now has been?
Yeah, I think I'm with you with the Elephant and Castle extravaganza being the favorite episode. I remember just walking down that basement there and seeing that huge table he had set up for us with all the microphones on there, and felt like it was a presidential press conference with all the people that we had there too. That was a ton of fun. And then a couple of other events that I liked. We back in the early days, we used to go over to Options Express headquarters and do the show over there. That was a lot of fun. Enjoyed that. Definitely also enjoyed the event that we did a couple months ago, kind of piggybacking off of the Option Pit All-Day event. That was a lot of fun too. And once again, if you guys want to go to an event with Sebastian and the boys at Option Pit, they definitely put on a good show, that's for sure. And it just through the years, there's a lot of fun episodes and just a lot of fun moments that we'll talk about. But the live events were definitely the most fun of them all. Some of the arguments that we had through the years. I remember when Alex and Sebastian were going at it about volume on SPY options. That was definitely one for the ages. And yeah, it's just been a ton of fun through the years. Just every day, or every Tuesday and every Monday and Thursday when we record this show right at the close of the market, it's just something to look forward to. And even though we're all in different venues, we've come together and we've got to share our thoughts on the markets and our passion in life, which is option trading, with 10,000 of our best friends. It's a real gratifying feeling.
Well, Tucson, I took the pride of place as the host to take the nice Easy Pearl there, which is our first big live event. And unfortunately, the Viceroy and the Rock Lobster weren't part of the program then, so they can't turn to that Easy Out for their favorites. So I think it's a flip of a coin. I will go to the Viceroy first and say, Mr. Viceroy, what is your favorite memory of it? Probably, I don't know how many you've been on now, but at least 150 or so episodes that you've been on.
Yeah, I think the second or third episode I was on was Legal Day One after the Schwab acquisition of Options Express. But like you and Mike, I really enjoyed the live shows. And I think my first live event was from the floor of the FIA. Jimmy Ruzan and I came over to FIA. And the great thing about the live events, then we did live events over at RCM's office. And then I was able to make it to this last live event at Binny's Steakhouse. I mean, the great thing about the live events are, number one, we get to meet the listeners, and I've had the good fortune to meet a lot of the listeners over the time I've been doing the show. I mean, sometimes it's been, as I say, folks walking up the driveway, which now gets a little spooky, or meeting people at events. Or I was out at a wedding in Seattle and I met somebody who listens to the show, which it's always terrific to meet the listeners. And I got to tell you, generally at first when someone says, "Are you?" for that first moment, you get a little defensive, and then they say, "I hear you on the show. I love it." Mike talked about Sebastian and I going at it. The things I like the best are when any of us go off on what I'll affectionately call a rant. And Mike a couple weeks ago did, I think about 17 or 18 minutes of the best options content I had ever heard. And, jokingly said we at OX were standing up with our cigarette lighters. But it's also when those of us, the guests, get to reach down to our real expertise. About a month ago, Andrew did a question late into his show of trading a butterfly at expiration. And it was probably the most education I have gotten in the last 10 years of my career, other than living through stuff, other than experiencing stuff. But to listen to Andrew talk about what was clearly his expertise as a market maker, trading a butterfly, going into the last minutes of expiration. I hate to say sometimes I don't think everybody realizes how much good stuff is on the show, but there are pearls of wisdom here. There's a lot of good-natured bantering and stuff that goes on, and that makes the show fun. But it's when we each get to go into our core competencies and talk about what we know best. I think the ability to have somebody like an Andrew on the show who is really an option quant and a former market maker, somebody like Mike who runs money for a living, I think those are extraordinary opportunities, especially when they get to talk about what they know best. So I think some of the rants, some of the extended explanations, I think those are just terrific.
Well, we certainly had a few of all of those on the show over these 400 or so episodes. And Mr. Rock Lobster, I will now turn to you. Same question for you. I can't quantify it for you either, but I know you've been on a little bit longer than the Viceroy. So probably I would guess probably around half of those, close to 200, if not exactly around that number. And plus you have your earlier guest spots. I believe Mark dragged you in once from the offices of The Street where you and he were doing something back in New York at a time. So you've been on earlier than your official timing as the Rock Lobster, but still over that 200 or so episodes, what really stands out to you?
Well, besides when you changed the intro where I officially became the Rock Lobster.
Yes, that does make it official. When the announcer says it, it's official.
That's because even in our the option pit chat, I get the lobster, and we have a lot of clients that listen to the radio show, and I've popped in. That part has been really fun. I just like talking to people about options. And one of the things I like most is like the listener mail, like all of the permutations and ways that people kind of get all twisted around things, because they're just coming at it from from brand new, right? And there is so much in the language of options and just trading them in general. It's hard to kind of, once you start, the thing is you can just start. You just open an account and you're off and running with the pretty much infinite amount of possibilities to choose from. So I've enjoyed the listener mail part and all the questions about and people get some pretty detailed questions about what's going on as well. So, and it's fun to take the questions and try to answer them as best as possible. So I have liked the listener mail section. I did love the Tucson rant about annuities. I thought that was one of my favorites.
Oh yeah, I forgot about that too. Just as you mentioned it, it occurred to me. Yeah, that was a great one too. Getting him animated is always a fun moment on the show.
I'm like, dude, he's just, and I think FINRA should just take that and just put it on their website and probably get a lot more done. But and overall, I think as far as moments, trying just to get down to the nitty gritty of how things work, and for free content, it's pretty darn good, and it's been it's been enjoyable. My my half-life here on the app.
It must be, particularly someone's listener questions, it must be somewhat frustrating for you because people expect almost an entire options course in a 2 to 4 minute question.
Exactly.
Explain this and this and this and this and this.
How the VIX affects the SPX in detail. That's like a 3-week class.
And do it all succinctly with about 3 to 5 minutes. It's always a fun challenge. But yeah, the listener mail, I definitely concur. Probably overall net of all the segments we do is probably my favorite. I've said that on the show many times because that's really the reason we do this show. We do it for you guys and to hear what you guys want us to talk about and the questions you have. And we get so many questions. In fact, we're going to get to a bunch of those a little bit later in the show because we thought what better to do with the 400th episode spectacular than devote it to you guys. But I probably, if I have I'm not sure if one question sticks out as more as a genre, a style, a type of question. And that is indeed the questions kind of like you alluded to, Andrew, that some people really will go down the rabbit hole with multi-part, very, very detailed questions. Explain this, and then this, and then this. And if I did this and I adjusted this, and how do I do it delta neutral versus doing this, and leg into this leg first, and all these various deep permutations. One comes to mind recently of someone wrote in about I forget the name, you have to forgive me, about using the bond options on the bond portfolios and how to use that as a surrogate to the fixed income exposure and all the very recent adjustment questions we've had. There's a lot of great ones out there that really stand out. So those are probably my favorite. Keep those coming. We love those. We can't always get to all of them on the show for the reasons we just outlined. Some of them are just epic and it would take a whole show, if not more, to answer, and as opposed to the 10 or 15 minutes we usually have for listener mail. But we still love them. Send them in. We try to respond to everybody in a reasonable time frame. If we don't, that's on us. We apologize. But we're getting better at it. Don't worry. And before we jump into some of that listener mail, we do a lot of different segments on this show. Each of us kind of contributes to different parts. A lot of people write in all the time, say, hey, what's your favorite unusual activity? Andrew and I usually do a lot of the unusual activity segment, the odd block, and it's kind of hard to pick out a favorite. If I had to pick a genre of name, it's kind of just because we do so many of them, it probably would be the cheapy biotechs because there's just so many of those $2 to $3 biotechs, and they're always doing something crazy, usually buying out of the money calls en masse. And so by that virtue of just their frequency and ridiculous size sometimes for a $2 name, those are probably have to be my favorite kind of genre of unusual activity that we talk about on a regular basis. In terms of a single trade that kind of just kept on giving for a sustained period of time, I think is still in the headlines even today, it probably would be the recent kerfuffle over the whole Family Dollar Tree. We had that person coming out just doing tens of thousands of contracts on pretty much almost every strike he can get his hands on, just buying all the premium in the world and then rolling it. And it was just madhouse. Someone clearly thought something was going to happen, but they didn't really have specificity as to what. And so they were just buying everything. And that was kind of interesting from a size, from a kind of almost lack of discretion perspective, and a lot of other things that went into that. That kind of kept going. And we kept talking about it many times because the saga was ongoing for a long period of time. So in terms of, I think the trade that kept on giving, the gift that kept on giving, it was certainly probably that Family Dollar / Dollar Tree, a whole brouhaha that erupted, and the crazy option trading we saw as a result. Andrew, do you have any specific memories from the odd block that really stand out to you?
I remember a couple of just ridiculous home runs. I think one of them was an ESI where somebody bought basically calls into an announcement, and they went from 30 cents to $4 or $5 or something like that, or 60 cents to that, something huge like that. But for the most part, what's interesting about the trades in the odd block is how people use. I mean, just for me, how people use options like in a more long-term way. They're using it as an investment in a stock, and their timelines are very long. So that's more like a general observation after doing editing the activity. The size tends to be longer term and not as much, shorter term swing at the fences like, the Family Dollar Tree where Clarence Beeks must have whispered in somebody's ear for that which calls to buy or buy all the calls. So I think that's, as far as a favorite, that one sticks out to mind because it was just so on the money. Into what was pretty much a known news announcement at the time. That was 3 months ago. But that's the one that sticks into my head. Besides just all of the long-term positioning, I see editing the unusual activity.
And of course, Uncle Mike, you usually handle the strategery duties here on the program. Is there a particular episode or a particular segment of the strategy block that really stands out for you, aside from the obvious one, of course, the one we just did a few weeks ago that was just in the sheer epicness, very difficult to match. But aside from that one, any other particular bouts of strategery that really, really resonate with you?
Well, the annuity rant, I would just, that kind of brought back some memories today. That was definitely that was one of my favorites, I think. But, the thing I like about the strategy block is this gives me a chance to be out there, so to speak. In other words, if I make a bonehead trade, I'll talk about it on the strategy block, and 10,000 of my closest friends can hear about my bonehead trade. But if I make a good trade, it's one of those ones to where you can hear about it, tell people about it. And the things with which I like about it is that everything's out there for the public. And, the option trading community is very small relative to the world, so to speak. But it's one where we're in this together. And I think that one of the benefits of the strategy block is it gives me a chance to share things that I'm doing on an everyday basis with the world. And it helps out the greater cause, which we're really all in this for, and that's for the continuation of the joy of the derivative world.
The joy of the derivative world. I kind of like that. I don't know if I've ever heard that exact phrasing, but c'est la vie. That we're all in it for the joy of the derivative world. Sounds probably maybe a bit sinister.
The 400 extravaganza is the joy of the derivative world.
That's our title.
There you go.
The joy of the derivative world. There's a reason we don't call it the Derivatives Insider Radio Network. We'll just leave it at that. All right, as we move on from our reminiscences into some of yours, actually, some of your questions and comments. We get a lot of them here on the show, so we thought what better thing to do here on our 400th episode spectacular than devote an extended period of time to you guys, really pick your brain, see what's on your mind. So without further ado, let's dive into our listener mail Palooza.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, you guys know the drill by now. You guys can send us your questions to a variety of different outlets and venues, including our website, theoptionsinsider.com. Just click on a comment there or use the website feedback form. A lot of you guys like to use that, or find us on email, questions@theoptionsinsider.com. Be sure to put question for the option block somewhere in there so we know where to route you, or find us on social media, twitter.com/options, facebook.com/theoptionsinsider, or just Options Insider on StockTwits. So I remembered it this time. So there we go. So no shortage of ways for you guys to find us, or of course we have it all built in to the mobile app as well. All right, so let's kick things off. I tried to pick a representative sample of the different themes we like to hit on a regular basis here from all of our mail in the old mail bag, and we certainly get a lot of different topics that come up quite a bit, and different variations on them. So I thought we'd hit on a few of those because it is a looking back type episode, and a lot of you guys send in great questions. So we'll start off with one here from Charles B. He writes, "Great show, guys." Well, thank you, Charles. He goes on to write, "Congrats on your continued success. I recently stopped trading options on Google and Priceline because the spreads were just too wide. Why do the market makers do this? Isn't it in their best interest to provide an incentive for traders like me to actually trade the product? If I can't afford the spread, then everyone loses." This kind of goes back to something we were talking about in the trading block segment there, the reminiscence block, if you will, and something we talked about on the show many times here. The whole market makers are evil, market makers are out to get me, market makers are conspiring against me line of thinking that emerges with a surprising amount of frequency, even in our listener mail here on this show. And the truth is, if there's really a Darwinian type profession, market making certainly would fall into that category. At the end of the day, they're really only charging spreads. I mean, back in the days when things weren't decimalized, there was no linkage, and things were several dollars wide in some cases, you can make an argument that things were certainly, there's a lot of fluff in those spreads. These days, in a lot of these products, a lot of that spread you're seeing is actually reflective of a lot of the things we've talked about many many times on this show, liquidity or perhaps lack thereof. You don't mention where you're trading your options, but the farther out you go, of course, the wider those spreads are going to become because the liquidity just isn't there. If you're trading front month at the money, they're not going to be as wide. You don't mention how wide they are either, but they're not going to be as wide as the farther off stuff. So maybe you need to look at different strikes to get a little bit more liquidity there to help tighten up those spreads. But at the end of the day, those spreads are essentially a function of the liquidity those guys are getting, as well as the paper flow that's going on in that product. But essentially, if that strike isn't trading that much, or if there's a lot of risk associated with that contract, then that spread is going to be wider just by default. You have a big expensive name like Priceline and a less expensive but still expensive name like Google. Then, of course, that's also a big expensive name to be trading options on. There's more risk in the underlying, so the spread's going to be a little bit wider as a result there. So at the end of the day, I know people like to paint this brush of the market makers are out there to squeeze every last dime for you. At the end of the day, usually those spreads are pretty much about as tight as they can make them without really getting run over. And sometimes in a lot of these penny pilot names, those spreads are even a little bit tighter than that, which that you can reasonably make a living on being a market maker, hence the mass exodus and implosion of so many prop trading firms in the past decade or so. If it was as much of a money palooza as you said, a lot of these firms would still be around. And the fact that so many of them are not kind of just speaks to how little fluff and how little profit is really built into these spreads these days. Mr. Rock Lauster, perhaps we'll start with you. Anything you want to say to our friend Charles B. asking a question we've heard before, but perhaps a little bit different take on it?
Well, the thing with Google and Netflix or even Priceline is the underlying is $500 wide, and the tick in those stocks is about 25 or 30 cents. There's really no liquidity like we used to remember sort of liquidity. They're trading zones. So for a liquidity provider to put up any size up there's not a lot of hedgeable underlying for them to go get, which is generally why the SPX is trading a little wider, and why some of those Google and Netflix, the markets are pretty wide. But considering how large the underlier is or how large the contract is, it's not that bad. Even though it's big, relative to the risk of, don't forget, all the liquidity you see all have to be put up simultaneously, meaning if I put up a market in Netflix and let's say I'm 10 up simultaneously on, multiple strikes. So the underlying delta, even for small liquidity, is huge. And you have systems that will basically stop providing quotes once you start getting fills. And the problem is, and this goes to one of the other questions, the technology race is got so big in the business that you're competing against firms that have hundreds of millions of dollars to dump into how fast their technology is. So liquidity providers are kind of at the mercy of ultra fast trading. And the retail trader really never sees that, right? They just put their stuff out there somewhere in between the markets, and generally it'll get filled or it will sit on the book and wait. But the liquidity provider is kind of at the mercy of, high-speed trading, and that is part of why you see the markets like that. And until exchanges start thinking a little more about the liquidity providers and per se, that's probably how it's going to be. And like slowly but surely, and Alex has commented on this, liquidity has been going out of the options market and been getting pushed into just relatively few firms. So as a former market maker, I didn't want to be in an arms race with Citadel because they were going to win. So it wasn't worth it to basically actively make markets. It's still good for the margin, but from that point of view, it's really not worth it. But you go trade the SPY and it's 2 cents wide. So that is a pretty competitive market because the underlying is liquid to 500,000-600,000 shares or something like that. So that's just part of the market function is liquidity. The more liquid the name is, the better market you're going to have. Even if you think the market makers are trying to get you, it's all just a big computer program. So don't take it personal.
Yeah, and to Andrew's point, they're not great liquid underlies to start with. I mean, Google, Netflix, Priceline, some of these things, they just don't trade much. Some of the problem is Dodd-Frank, and again, this opens up a Pandora's box. Some of the problem was high frequency and continues to be high frequency because, look, there are liquidity providers who will make markets for retail. I mean, we all know all the liquidity providers tell that story, but to Andrew's point, think about the fact now that there's really 5 or 6 of them that are probably providing 90% of the liquidity in the options market now. And there's Citadel, there's Goldman, there's Susquehanna, there's Timber, and real competition like we saw in 2000 when we started the ISE. It was great for a while, but now it's kind of like settled into that rut. 12 exchanges, 13 exchanges, markets are fragmented. So it's a number of things, but 3 things I would blame here is market fragmentation, the size of the underlying, and Dodd-Frank, which really has drained much of the liquidity from the stock market. And if you don't have good liquidity in the stock market, you ain't going to have good liquidity in the options market.
One last point I want to make on the liquidity note, because we just did our volatility views on Friday, went out today for a lot of you guys listening here on the network. And we had Ewan Sinclair back on, a well-known author in the volatility space, and he's been a frequent guest on that program. He made an interesting point last Friday. I hadn't really thought in those terms before, where he said a lot of people just in general tend to overestimate the amount of liquidity that is available in the options market as a whole. I mean, there aren't that many underlyings at the end of the day that really have options listed on them. And at the end of the day, how many of those actually trade very actively? And so just as a general overall viewpoint, he kind of made an interesting point that the options market as a whole doesn't offer that much, at least certainly not as much as a lot of people assume when they think of the broad depth of the options market. And it sounds like our friend here is falling into that trap as well, in addition to the market makers are out to get me. Hey, if you want a cheaper, tighter tech name, hard to believe to say this, but hey, get away from the expensive $500 and $1,000 ones. Go to the relatively cheap, by comparison, Apple now. It spreads a little tighter in there because Intame's a little bit cheaper, and they can get away with some stuff. Hard to believe we'd be saying that about Apple. When not that long ago, that was pretty much the example number one everyone brought up when it came to too broad spreads on a tech name. Let's see. So many here to choose from. Okay, let's go for one from S. Davis. He writes, I have a question for the option block. Because I love all your UA unusual activity shows on the network, including Oddities and the Odd Block on the option block. Well, thank you for that, Mr. or Mrs. S. Davis. They go on to write, I find this stuff endlessly fascinating. I wonder if you could clear up an issue for me. I don't really understand the rules about insiders and options. I know that a, quote, insider can't just sell his stock before a non-public event without a great deal of disclosure, but what are the rules regarding options? Is buying a put considered analogous to selling the stock from a disclosure perspective? It is illegal for an insider to buy puts ahead of a material non-public event. Thanks for clearing up this very basic question and for creating such great programs. Short answer to your question there, Mr. or Mrs. S. Davis, is it illegal? Yes, they can't do that. They can't come out and establish. I mean, it's the same thing. It's a bearish position at the end of the day. Or we talked earlier on a recent show about buying calls to kind of run around wash sales. At the end of the day, those things are still bullish or bearish positions from an IRS or from an SEC in this case perspective. And so they just because it's a different instrument doesn't mean the underlying outlook, the underlying sentiment is different, which is why we've talked a lot about why so much activity still goes up in the options market. Of course, still has the same prohibitions against it from an equity perspective, but as Alex just alluded to, it is fragmented across coming up on 13 different exchanges, so that kind of hides the liquidity a little bit. And also, at the end of the day, the regulators just aren't as adept at oversight on the options side of this front as they are on the equity side of the space. At the end of the day, you can see a big block going up in the equities pretty easily. You can kind of just spread it off across smaller chunks. You can kind of still trace them. Whereas options, we see a lot of interesting tricks going up. People kind of trying to paint the table a little bit. People hitting bids before they come in to buy stuff and trying to trigger things and routing them through a variety of different accounts. This has been going on for so long that they've gotten pretty adept at it. Not to say the options market hasn't evolved to try to catch these guys. We've seen a lot more improvements in terms of surveillance, a lot of the exchanges getting into the act and helping SEC and FINRA really start to scan these things, starting to cooperate more to catch these guys who are doing sweeps across multiple exchanges to get all these unusual activity trades type in. We've talked about some on the show recently where people have made trades that seemed, shall we say, oddly timed or well timed, I should say, at best, and very, very highly suspicious at worst. And those trades weren't taken off in a time frame you might consider would be reasonable for someone looking to take those profits. We, of course, speculated that perhaps the regulators or the brokers had stepped in to freeze that account while they investigated it. So we're seeing more progressive and proactive steps on that side of the fence. But at the end of the day, yes, they can't do the stuff that you outline. It's the same rules as with stock. You can't go out and do it. Alex, this one falls in your wheelhouse a little bit. Anything you want to add here in terms of clarity for our friend Mr. or Mrs. S. Davis?
Yeah, this is Rule 144 stuff, and a couple things to point out. Number one, there actually isn't a uniform rule with anything other than timing. So, for example, some firms will allow a quote-unquote insider to buy a put to hedge, and some won't. The big insider stuff, I mean, when, Baumer wants to hedge or trade some Microsoft or Cook wants to hedge or trade some Apple, those trades are generally not done in the listed market because those instruments are liquid and they're done structured. I will share one great story, and that's Kramer when the Street.com came public. I think the night they came public, he was probably worth $400 or $500 million, and they had a 1-year trading restriction. His second in command was my buddy Dan Colarusso, who's at Reuters today. And we went to dinner the night they came public at Michael Jordan's in New York City. And Dan was worth a significant amount of money, tens of millions of dollars. Couldn't hedge it for a year, couldn't buy puts for a year, couldn't short stock for a year. That was a Street.com issue. That was in their bylaws. A year later, the stock was worth, I think, 90 cents. So it's not that people don't want to do this. Sometimes it's a corporate restriction. When we brought the ISE public as an insider, we had certain corporate restrictions. The SEC doesn't really have as many hedging restrictions as you would think. They have timing restrictions about what you can't do within the period prior to an announcement and post-announcement. But a lot of that stuff is corporate. And the really big trades don't get done in the listed market. They get done in the structured market. They're generally collars. They're generally 3 years and a day. And they're generally not sensitive to option pricing. What they're sensitive to is the borrow-lend rate, and that's nothing right now. So, but it's multiple factors.
Yeah, the hedging thing always tends to obscure it a little bit because they tend to couch it as hedging, and they try to get away with it a little bit more. And a good point about the structured stuff, because that is, you're right, where a lot of this stuff goes up. You're not going to see, Gates and Ballmer, you're right, et cetera, coming and buying, 10,000 puts on Microsoft options. It might happen, but you're probably not going to see it. You're going to see some big structured deal, which of course will be hedged in the listed market, so you'll see the impact there. But still, at the end of the day, it's going to be some obscure thing, so it'll be even more difficult for you guys to see that trade going up. But at the end of the day, you're right, it does get into this kind of weird issue, and it kind of reminds me of when we first launched this network as well, and there were things that were going on that were kind of all the things about dating corporate options and what strike price these guys were getting and how they were backdating these options to when instead of when they started with the company, but a date any time in between when the strike price was most favorable for them. That was a big issue at the time. They've since cracked down on that. So we have seen a lot of gamesmanship with the way these corporate options packages are constructed and issued, and that'll probably continue, but the core spirit of it is that they're not supposed to be able to do this stuff, even though on occasion they do get away with it, and that's why we have a show like this, where we get to highlight some of the stuff that looks a little bit dubious to us, and then we could highlight it. Like I said, again, it gets a little bit hedgy, a little bit murky when they try to hedge. When it's outright speculation, it gets a little bit easier to try to tie one thing to the other from an illegality perspective. Let's see, we've got a couple other, how much time do we have? Well, we got time for a few more here. I think we'll keep on this theme of market makers here because a lot of people have this kind of question. Let's see, this one comes from Alan Pinkman. He writes, "Hello, Mark, along with the Viceroy, Uncle, Lobster, and Meatball. I know that many of you came from a market-making background, but I also note that all of you are, quote, former market makers. What was it that prompted your exit from the business? Do you think it's even worth exploring that as a career path any longer, or is options market making pretty much done as a career these days?" That comes from Alan Pinkman. Well, we kind of touched on this earlier, but it is a good question there, Alan. And I kind of just alluded to it earlier at the top of this listener mail block that there are fewer firms. That is for a reason, for many reasons, actually. A lot of it has come from, we talked about the spreads earlier, as wide as you guys think they are. They're not wide enough to really sustain and support a lot of these operations anymore, specifically when it comes to a risk perspective, the amount of risk you're taking on these days to make these prop shops viable. That's why they're really called prop shops these days, not as much market making any firms, because they're taking a lot more proprietary risks in the marketplace, and they did certainly when Andrew and I were market makers. That was really a game where you tried to stay flat, definitely delta neutral. You tried to be as close to Vega neutral as possible. At the end of the day, that wasn't really possible. You always had some residual position, but nowadays that stuff looks totally different. The people are really putting on very, very sizable positions and really relying on that risk to make their money, because the day-to-day trading is just not really there in terms of being profitable in and out. And as Andrew mentioned, also a lot of that has now consolidated in the hands of a few very large firms, the Citadels and the Susquehannas and the others out there that are really dominant from a liquidity provider perspective. So if you're smaller, less capitalized, it's difficult to compete with them. And also the costs of doing business these days are just tremendous. The amount of cost it takes to set up and connect to all these different venues we're always talking about, all the exchanges, and keep up with their fee schedules and smart routers and route accordingly, and the amount of technology you need to be able to process all this stuff and do it well is not inconsiderable. And so all these costs and risks have really increased dramatically over the past decade, to the point where it's really just made it not viable for anyone but very, very large firms with deep pockets to really become a liquidity provider and really be out there with the business. The sole focus of your business is to provide liquidity. A lot of these smaller shops are really doing prop trading, and liquidity providing business is kind of on the side. They do it in a few names that they could really make some money in, but they do that in order to be able to trade their other stuff. So it's not really the viable proposition that it once was, unfortunately, or perhaps fortunately, depending on your viewpoint. But I won't put words in your mouth, Andrew. Perhaps you disagree vehemently. Maybe you think market making is making a comeback, and this is the time to get in on it.
So what I would say is at Option Pit, we have professional clients from big funds to small funds. We're actually sending one of our pro clients is going into the market maker world. We have done some training with him over the last year. So he's actually doing it the other way. He's becoming and for the reasons that are still there, that look good. There's still good margin treatment. Low commissions relatively to what retail is, by factors, what retail is used to. So if you're a proficient trader, there are firms around that are still looking for market makers. It's more, I think, of a video game now than it used to be, which doesn't appeal to me particularly. But so we are sending one pack. So we are sending somebody who will be market making, and we've definitely thought about trying the VIX and some of the vol product options, because I think there's a lot of edge in those options. But that being said, it is not quite the game it used to be, and mostly just the technology and capital requirements are so much bigger. You have to be fairly good sized to really give yourself a fighting chance. And from a technology point of view, you really don't have any chance at all. You have to keep relatively wide markets and just wait till things get to you. So it's a much different game than it used to be. But for somebody kind of smart that wants the good margin treatment and the lower commissions, it is a viable option. And Option Pit is actually, we probably have the only market maker training class of any. I was
going to say, you're going after a very, very targeted audience, shall we say?
It's not very big, but it's available for somebody who actually wants it.
I like it. Keeping the dream alive, sir. I like it.
Well, we try.
Uncle Mike, I know you weren't a market maker, but anything to add on this particular question here?
Yeah, I was actually approached a few years back about becoming one, and the thing that I've always noticed that always sticks out in my head is every time I go to the CBOE for an event in one way, shape, or form that we're doing for clients, they always have that one bulletin board. I believe it's on the second floor up there that shows the bid and the ask of a seat on the CBOE. And so I've done the math in my head in terms of like the cost of what it would be. And it's been a while since I've been there, so I have no clue what a seat on the CBOE would be right now. Or exactly how it would work. But I remember just at the time that I was looking to do it, I saw the cost of what it would be, and that was probably the first thing that just turned me off to it, because you could obviously rent a seat, you can get it financed, there's ways with which to do it, there's ways to find backers and things like that. But I'd always came back into my head, I'm thinking, okay, if I'm going to go through all of that, do this, that, the other, find this, do that, and I looked into it a couple times. I'm like, well, I think it would probably just be easier to open up an Options Express account, and in turn, the odds of making money seem relatively similar to me. And that's kind of why I chose the career path with which I did.
And Alex, same question for you. I know you mostly been on the exchange side of the fence, aside from your recent foray on the brokerage side of the fence. So you weren't a market maker, but you certainly interacted with a lot of those guys over the years, seeing the evolution of that space. What do you have to say here for a friend who wants to know about becoming a market maker?
So if maker-taker goes away, which it might, but I don't have a timeline on that, and maker-taker basically is driving how liquidity is created today. If maker-taker goes away, there's, in the next month, 1,500 jobs in Chicago and New York, and the whole landscape changes, and we possibly go back to a market that looked like what the liquidity providers were in the, very, very late 90s to early 2000. The issue of technology is a real issue. It costs tens of thousands of dollars a month now to be connected to all the exchanges and to be in compliance with Rig NMS and linkage. But the firms have built that technology. I mean, there still are modest-size market-making firms in Chicago and New York. There still are individuals on the floor of the Amex, on the other floor. SIBO really only runs 2 pits anymore, but that just means most of those people are upstairs, and that had an impact too. The fact that you could be upstairs meant you could put somebody in front of 8 screens and they could do 24 names. And as Andrew said, it's a video game. But maker-taker goes away, and the whole liquidity provider equation flips. And there are always going to be opportunities to start. I mean, I tell the story all the time about Ken Griffith, who is Citadel, and Ken he did convertible ARB out of his dorm room. And you say, well, can you really do that today? Can you keep up? And there are lots of people who 10 years from now are going to be wildly successful that are starting today. And I don't ever want to tell anyone it can't be done. But you have to be smart. You got to be clever. Most of the books today are vol books. As Andrew pointed out, pre-87, everybody was delta neutral, and they learned that didn't work. And post-87, everybody learned about gamma. And in the last 10 years, everybody learned about Vega. And today, everybody's a Vega trader. They're basically trying to get long vol when they think vol is cheap. And I'm not talking VIX vol. I'm talking about the vol of Google and IBM and General Motors. And the good intuitive people, there's still opportunities and there's still jobs all the time. I know this will make my boss angry, but periodically when I'm on a Bloomberg machine, I go over and flip to the job page, and there are on any given day still dozens of option jobs. Are they desirable? Are they market making? There's still stuff out there. The business is not as big as it was. Some of that's technology. Some of that's the character of the order flow. some of that's make or taker. But yeah, if your heart is set on doing it, I would not take a no answer from anyone. And I would, as Mike pointed out, have a friend go check the looking for jobs boards at the SIBO in addition to the quotes boards. Go knock on the doors at Citadel, Optiver, Ing, Group 1, Peak 6. Yeah, they've let a lot of people go, but there are opportunities for smart people.
I like it. I think we'll leave it there on that very, very optimistic note from the Viceroy. He's not always known for being the ray of sunshine on this show, but clearly is setting a new leaf here on our post 400 episode into 2015 era of option block shows. A lot of great questions. Thanks to everybody who wrote in. We'll get to more of these on a future show, but unfortunately that's all the time we have for this epic 400th episode spectacular. But before we go, as always, let me check in with each of my cohorts here on the old All-Star panel, my partners in crime, to see what they have cooking that may interest you, as well as perhaps leave you with any interesting ideas or things they perhaps like to see on the show, or perhaps have us incorporate into the show going forward. Uncle Mike, perhaps we'll start with you, sir.
Plenty of events coming up with RCM. For more information on the specifics, go to rcmfutures.com.
And anything you'd like to leave with in terms of things you'd like to see on the show going forward, or you just like it all the way it is?
Love it all the way it is. But in terms of what we'd like to see, more listener mail, more comments, more viewer feedback. We always want to get better, and it's always great to hear from you guys. It's a weird world with which we live, in that we can do the show from pretty much anywhere, and we're alone. We talk to each other, but we don't really get to see a lot of people face to face. So don't feel that you're being a burden to us by sending us emails or giving us a call or asking us questions. We'd love to hear from you.
Except for me, you're being a burden to me. So send them all to Uncle Mike, and he'll address them all and answer them all going forward. Of course, I'm kidding. We love to hear from you guys. And Mr. Viceroy, what's coming on the pike in the land of OX, and anything you'd like to see in the show adopted or incorporated into the show going forward?
I think when Mike gets to talk money management and Andrew gets to talk providing liquidity and market making involved, that we should start charging for the show, because I think that's stuff you can't get anywhere for free. So I think there are pearls here, and as you've pointed out, I'm not always the easiest person to convince, but I think there's some great stuff we do periodically, and I admit openly I've learned on the show, and I think we've all learned on the show, so I think you got to listen. Sometimes you got to filter out the good-natured kibitzing and kidding we do of each other, but I think there's lots of good stuff here. I mean, I listen to the show on the commute in. I listen to the technology show a lot, and again, my good friend Henry is on there, and I think, being able to get Henry's input is kind of like being able to get Andrew's. It's stuff you'd pay for, but you don't have to. But yeah, I think the whole network is of high benefit, and you should keep listening.
Thank you for that free plug, Mr. Viceroy. The check is in the mail. And before we go, one last toss here to the Rock Lobster. Anything you'd like us to see incorporate into the show, as well as what's coming on the pike over there in the land of the old pit?
I would like the show to start to take maybe a little tiptoe into actual live live listeners. Like, they call in live, they got their shot, and they ask their question, and it could either be like stump the panel, something like, wouldn't like seeing like a little twist thrown in there. Other than that, though, the show, I'd like all the sort of the give and take from the listeners and from sort of the panel as we get people's question, and that way we know what's relevant, because like I say, I've mostly forgotten the things I know about options sometimes, and it jogs my memory that people actually have those type of questions. So that's about the only thing I would think would be kind of fun, is to see if people could call in and ask their question, and see if we can answer that 3-day seminar question in 20 seconds or less.
So the man's gotten his taste of live programming, and he likes it.
It is. It keeps you on your toes.
It's like a little bit of live theater every day.
I gotta say. And as far as that, Option Pit is having a webinar on this weekend, Saturday, using options to trade stock. Basically, just understanding the correct way to use the leverage of options and get yourself some decent entry prices. Do a little hedging, and the whole idea, of course, is to sleep relatively comfortably that night.
Well said, sir. Keep cranking out those market makers. We need at least one more a year to keep offsetting the loss. That should fix all the problems there. I like it. Well done, sir. All right. And that, unfortunately, is all the time we have for this 400th episode spectacular. On behalf of the Rock Lobster and the Viceroy and Uncle Mike and indeed the Greasy Meatball and all of our legions of guests and other co-hosts we've had on in these 400 episodes, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. You guys truly, really are the reason that we do this. If it wasn't for you guys, we'd just be the bunch of us sitting hanging out on a Skype call a couple times a week, and that wouldn't be anywhere near as fun. So keep downloading, keep listening, keep sending us your questions, your feedback, your comments, the good and the bad. We love to hear them all. Keep downloading the mobile app and sending them that way. Keep visiting the website and keep letting OX know that you like the show and that you're listening to it, because that is indeed what pays the bills at the end of the day. And of course, we'll see you next time for our 401st episode spectacular right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.